nightly business report.
Good evening. Tonight, with a $401.9 million purchase in March, the central bank extended its dollar buying binge, the largest monthly purchase since March 2024 and the most this year. With 38,615 visitor arrivals in the first 6 days of April, Sri Lanka's tourism industry recorded a robust start of the month, representing an 11.5% year-over-year increase. With the ASPI increasing by 3.19% to 15,127.71 points and the S&P S12T rising by 4.54% to 4,458.49 points, the Colombo Stock Exchange recorded notable gains today. And following a day of tumultuous Wall Street trading, Asian markets recovered today as investors regained confidence in the face of shifting market conditions. Good evening and thank you for joining us. The central bank continued its dollar buying spree in March, purchasing $401 million, the highest monthly purchase this year and the largest since March 2024, as part of efforts to rebuild foreign currency reserves and prevent volatility. The Central Bank of Sri Lanka has continued its dollar buying spree, purchasing a record $401.9 million in March, marking the highest monthly foreign currency purchase this year. In 2024, the bank bought a total of $2.85 billion in foreign currency, the most of an year, surpassing the $1.89 billion in 2023. This year, the central bank has already purchased $484.5 million in foreign exchange during the first 3 months. As of February, Sri Lanka's gross official reserves stood at $6.09 billion, with further increases expected from March's collections and an IMF tranche. However, the implementation of reciprocal tariffs on US exports may impact Sri Lanka's trade deficit, potentially affecting the central bank's ability to maintain its pace of foreign currency purchases. The rupee has depreciated by 1.5% against the US dollar this year, with concerns over its stability amid global uncertainties. Despite these challenges, analysts suggest that global stock market reactions, including Sri Lanka, may be exaggerated, with reassurance from US officials that economies are not in crisis. The International Monetary Fund has appointed Ivan Papageorgiou as the new mission chief for Sri Lanka. Succeeding Peter Breuer, Breuer played a pivotal role during Sri Lanka's economic crisis, leading negotiations on the $3 billion extended fund facility approved in March 2023. He also oversaw the first 3 reviews of the program and advanced critical discussions on debt restructuring and macroeconomics reforms. Papageorgiou, Deputy Division Chief in the IMF's Asia and Pacific Department, brings significant expertise in economic policy and IMF operations. He will now lead the IMF's ongoing engagement with Sri Lanka as the country continues its reforms under the EFF program. This transition comes at a critical time as Sri Lanka works to stabilize and rebuild its economy. Sri Lanka's tourism sector reported a strong start to April, with 38,615 tourist arrivals in the first 6 days of the month, marking 11.5% year-on-year growth, according to the latest data from the Sri Lanka Tourism Development Authority. Sri Lanka's tourism sector is on track for a strong April, with an expected 194,863 arrivals, marking a significant increase from last year's 148,867. India remains the top source market, contributing 6,548 tourists, although its share has slightly decreased from 18% to 17%. The UK saw a notable rise, securing the second position with 5,438 arrivals, up from 9% last year to 14.1% this April. Russia dropped to third place with 4,185 arrivals, maintaining a steady 10.8% share. Australia and Bangladesh gained ground, ranking 4th and 6th, with shares of 7.2% and 4.9% respectively. Meanwhile, China's share has declined from 6% to 3%. From January 1st to April 6th, Sri Lanka welcomed 760,891 tourists, a 3% increase from last year's comparable figure. Sri Lanka's tourism industry is showing positive growth despite global challenges, with diverse markets contributing to the influx of visitors. The country's focus on expanding its tourism base, particularly from emerging markets like Bangladesh, is proving effective in boosting overall arrivals. Adani Ports and Special Economic Zone Limited has officially launched operations at the Colombo West International Terminal, located at the port of Colombo. The terminal, developed under a public-private partnership, is operated by a consortium including Adani Ports, John Keells Holdings and the Sri Lanka Ports Authority. With an investment of $800 million, CWIT features a 1,400-meter quay and a 20-meter depth, enabling it to handle 3.2 million tours annually. Adani Group Chairman Gautam Adani highlighted the project's significance in strengthening regional cooperation between India and Sri Lanka. The fully automated terminal is designed to enhance cargo handling and improve vessel turnaround times, boosting Colombo's position as a key transshipment hub in South Asia. The CWIT project is expected to create thousands of jobs and drive significant economic growth for Sri Lanka. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange saw significant gains today, with the ASPI rising by 3.19% to 15,127.71 points, and the S&P SL20 climbing 4.54% to 4,458.49 points. Market turnover reached approximately 2.9 billion rupees, with a total share of volume of over 148 million. For further insights, we speak with Akna Tennakon from First Capital Holdings.
Thank you, Prasansa. So today we saw a strong rebound in the Colombo Stock Exchange alongside a relative recovery that was evident in global equity markets as well. After last week's sharp downturn triggered by the controversial tariff announcement by the US on the April 3rd, the market managed to reverse its biggest intraday loss since April 22nd of 2022. So today the ASPI jumped by about 467 points, driven by a shift in investor sentiment, with bargain buying playing a big part in this recovery. Stocks in the banking sector like Commercial Bank, Sampath Bank and Hatton National Bank, alongside key players such as John Keells Holdings and Haley's, were key drivers of the index's climb. Today, turnover ended at 3 billion rupees, which marks a 24.5% increase compared to the monthly average of 2.3 billion rupees. The banking sector was the biggest contributor, accounting for 33% of the turnover, while capital goods and food, beverage and tobacco sectors together made up 35%. Thank you.
Commercial banks' latest rates show a slight increase in lending and deposit rates. The average weighted lending rate stands at 8.53%, while the average weighted prime lending rate is 8.43%. The average weighted deposit rate and fixed deposit rates for various tenures are also recorded for the period ending April 4th, 2025. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Prasansa. The weighted average prime lending rate, or the AWPLR, increased to 8.53% as of the week ended 4th April 2025 from 8.43% recorded in the previous week. The main reason behind the increase in AWPLR was the increase in weighted average yields we saw during the last week's T-bill auction. In that, we saw the 3 months bill increase by 9 basis points to 7.59%, while the 6 months and the 12-month bill saw 7 basis points and a 6 basis points increase to 7.91% and 8.31% respectively. Moreover, the weighted average yield rates took a turn in the opposite direction. This is the lending rates, where the lending rates decreased slightly to 11.99% from 12.07% recorded in the previous week. With the slight movement in rates, the spreads also declined in this momentum and was recorded at 3.46% from 3.64% recorded in the previous week. Meanwhile, total outstanding liquidity in the market also improved compared to previous week and recorded at 190 billion rupees compared to 170 billion rupees recorded during the previous weekend. Thank you.
Gold prices rebounded in Asian trading today, climbing 0.7% to $3,002.68 per ounce. After hitting a 3-week low in the previous session, investors flocked to the precious metal as a safe haven asset amid rising trade tensions between the US and China. The previous day, gold has dipped below $3,000 per ounce, its lowest level since March 13. As traders liquidated positions to offset losses in other financial markets, support for gold was further bolstered by a weakening US dollar and growing expectations of interest rate cuts by the Federal Reserve. The US dollar index slid 0.4% during Asian trading today. Meanwhile, other precious metals also saw gains, with silver futures rising 1.3% to $29.9 an ounce and platinum futures increasing by 0.5% to $919.00 an ounce. Oil prices rose in Asian trading today, recovering a small portion of recent losses as traders remain cautious amid growing concerns over slowing demand and the escalating US-led trade war. Brent crude futures for June delivery gained 1.1%, reaching $64.93 a barrel, while West Texas Intermediate crude futures rose 1.3%, hitting $61.21 a barrel. Oil prices had recently plunged to a 4-year low following US President Donald Trump's announcement of steep reciprocal tariffs on several major economies, set to take effect on Wednesday. The intensified trade tensions between China and the US have raised particular concerns as Beijing retaliated against Trump's tariffs and vowed to fight to the end. Should the president escalate further trades, worry that these tariffs will disrupt global economic growth and reduce oil demand, with the added fear of a potential US recession amplifying the uncertainty. The Sri Lankan rupee showed slight movement against the US dollar at commercial banks today, maintaining stability compared to yesterday. According to Commercial Bank, the buying rate for the US dollar remains unchanged, while the selling rate has been a small adjustment. Let's now take a closer look at how the rupee is performing against other major global currencies in today's market. Break now. This is the Nightly Business Report. Welcome back. Lanka Rating Agency has upgraded Lanka Credit and Business Finance PLC's entity rating from B+ to BB-, reflecting the company's improved financial position, stronger capital adequacy and strategic expansion efforts. For further insights, we speak with financial analyst Imran Iqbal from Lanka Rating Agency.
Lanka Rating Agency has upgraded the entity rating of Lanka Credit and Business Finance PLC from B+ to BB-, reflecting the company's improved financial position, capital adequacy, and strategic expansion initiatives. Sri Lanka economy has demonstrated a strong recovery momentum, recording 5.2% GDP growth in the first 9 months of FY25. The macroeconomic stability has improved, driven by currency stabilization, a decline in inflation, and reduction in policy rates to single digit. The licensed finance company sector has expanded with 13.9% asset growth, while gross NPL declined to 11.3%, signaling improved credit conditions. Lanka Credit and Business Finance PLC has exhibited steady financial growth, with net interest income rising by 27%, net profit reaching 138 million in the first 9 months of FY25, from 111 million in the previous years. The company's strategic focus on agriculture, tourism, and microfinance and lending underpins the expansion plans. However, asset quality challenges persist, with gross NPL of 15.3% above the industry average of 11.3%. Strengthening risk management remains essential for long-term sustainability. At Lanka Rating Agency, our role is to provide an independent, objective assessment of credit worthiness. We do not promote or endorse investment, but instead offer an unbiased evaluation based on our rigorous methodology, incorporating both qualitative and quantitative analysis. While Lanka Credit and Business Finance PLC remains small but expanding player in the highly competitive LSE sector, it has maintained a capital base of 3 billion, meeting the regulatory requirement. The company continues to strengthen its presence in the rural market through strategic branch expansion. Going forward, enhancing asset quality, managing credit risk, and aligning NPL levels with industry standards will be the key sustainable financial stability. Lanka Rating Agency will continue to monitor Lanka Credit and Business Finance performance closely for future rating considerations. Thank you.
NKAR, a leader in Sri Lanka's tourism industry for over 45 years, has partnered with Australia's largest tour operator, Holiday Max, to bring Australian travellers to Sri Lanka for the first time. Holiday Max, a rapidly growing brand in the Australian travel market, selected NKAR as their destination management company to introduce its customers to Sri Lanka's unique experiences. Mr. Nilmin Nanakara, Chairman and Managing Director of NKAR, emphasized the company's commitment to promoting Sri Lanka through new markets rather than competing on price. He highlighted that maintaining high service standards and ensuring health and safety for clients have been key to NKAR's success. This collaboration marks a significant step in strengthening Sri Lanka's appeal as a travel destination in the Australian market. The partnership is expected to open with growth avenues for tourism in Sri Lanka. 6 years after it entered into the first original equipment manufacturer partnership in Sri Lanka, Seat Kalani Holdings has grown into a significant contributor of value addition to the country's burgeoning automobile assembly industry.
Seat tyres are now originally equipped in 11 vehicle brands assembled in Sri Lanka, including SUVs, cars, buses, lorries, pickup trucks, motorcycles and scooters. The company supplies tyres over 30 vehicle models, including 16 bus models and 5 motorcycle models. Seat Kalani provides more than 150,000 original equipped tyres annually, covering over 90% of vehicles assembled in Sri Lanka. The OE segment accounts for 12% of Seat branded tyres tyres sold in domestic market. Seat Kalani's partnership with automobile manufacturers highlight their confidence in tyre quality and performance, according to Chief Operations Officer Shamal Gunawardena. Among the brands using Seat tyres are Hyundai, Mahindra, Tata and TVS. Seat's partnership with Hyundai for Grand i10 represents a major milestone, with tyres rigorously tested in Germany to meet Hyundai's stringent standards.
Browns & Company plc has unveiled a state-of-the-art manufacturing and warehouse facility in Katunaika, designed to address the growing business needs. The new facility, strategically located near Bandaranaike International Airport, enhances Brown's logistical capabilities and market access across Sri Lanka, spanning 200,000 square feet over 8 acres. The hub aims to boost productivity, streamline processes, and improve supply chain management. The event was attended by Browns and LOLC Group officials, including Chairman Ishara Nanaikara and CEO Kapila Jayawardena. This new industrial park aligns with Brown's commitment to excellence, offering improved delivery times, product availability, and superior customer service. It marks a significant milestone in Brown's 150th anniversary, strengthening its position in key industries such as automotive, power generation, and agriculture. SLT Mobitel Enterprise is leading the way in supporting Sri Lanka's small and medium enterprises by delivering innovative technological solutions aimed at driving business growth and national economic development.
SLT Mobitel Enterprises has unveiled its 2025 service portfolio aimed at empowering small and medium enterprises across Sri Lanka. The company's initiatives focus on providing comprehensive digital services, including cloud infrastructure and robust cybersecurity solutions to enhance SME growth and operational efficiency. According to Selvadrian Vidyapan, General Manager at SLT Mobitel, the company's view empowering SMEs as a national mission recognizes the sector's critical role in Sri Lanka's economy. In response to rising cyber threats, SLT Mobitel has developed security services to protect businesses from increasingly sophisticated digital attacks. The company's new national initiative, Unleash Your Business Potential, integrates growth-enabling technologies and security solutions to help SMEs thrive in a rapidly changing market. The recent customer forum showcased SLT Mobitel's digital tools, offering hands-on demonstration for over 120 SME entrepreneurs. These efforts reflect SLT's Mobitel Enterprises' commitment to supporting Sri Lankan businesses in navigating the digital transformation landscape.
Hemas Pharmaceuticals and Hemas Surgicals and Diagnostics have appointed Dr. Mahesh Ranasoma as their new Managing Director. Dr. Ranasoma brings over 25 years of leadership experience in both multinational and local organizations, including roles at Global Rubber Industries and Shell Sri Lanka. He will play a key role in strengthening the company's partnerships and advancing its leadership in the healthcare sector. Hemas Pharmaceuticals has been a vital part of Sri Lanka's healthcare industry for over 6 decades, providing high-quality healthcare solutions across the country. Dr. Ranasoma is committed to enhancing accessibility to quality medicines and contributing to the overall healthcare ecosystem in Sri Lanka. Under his leadership, the company aims to drive sustainable growth and continue its success in the healthcare market. Let's take a short commercial break. Global business updates are coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets staged a modest recovery today, rebounding from steep losses driven by escalating global trade tensions. Japan's Nikkei 2025 led the resurgence, soaring nearly 7% after heavy declines in the previous sessions. The broader topics index also saw significant gains, rising more than 7%. Hong Kong's Hang Seng jumped 3% following a 15% plunge in the previous session, while Australia's S&P ASX 20 rose nearly 2%. Futures for India's Nifty 50 indicated a sharp rise at open. and South Korea's Kospi increased by 1%. However, Singapore's Straits Times Index bucked the regional trend, extending declines with a drop of over 2%. Asian stocks rebounded today after a day of volatile trading on Wall Street, with investors regaining confidence amid fluctuating market conditions.
There was some relief for investors Tuesday as Asian stocks rebounded. Japan's Nikkei index was up around 6% in early trade. Tech stocks were among the risers, following gains for US peers. Chip gear maker Advantest leapt as much as 11%. Markets in China gained too, with Hong Kong's Hang Seng index up around 2.5% early on. It all came after a day of wild volatility on Wall Street. Equities there swung between gains and losses, at one point soaring on a report Donald Trump would delay imposing tariffs for 90 days. The US president denied having any such plan.
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs.
In the end, the Dow Jones index closed almost 1% lower, while the Nasdaq eked out a tiny rise. Now uncertainty remains extremely high despite Tuesday morning's gains. Traders are on alert for any sign that tariffs could be paused and are watching for clues that a US interest rate cut is coming. Some now bet the Federal Reserve could act as soon as next month. Even traditional safe havens have seen falls, with gold and US government bonds heading lower over the past day. Some traders say investors may just be selling everything and holding cash while they wait out the storm. Now all eyes are on Trump's next move. He's threatened to ramp up tariffs on China yet further if Beijing goes ahead with its own retaliatory levies. With neither side looking ready to back down, the question is whether Tuesday's respite for markets will prove short-lived.
Shares of India's Tata Motors sank 10% yesterday, set for their worst day in over 3 years as its luxury car unit Jaguar Land Rover paused exports of its British-made cars to the US after Trump's 25% tariff come into effect.
Shares of India's Tata Motors sank 10% on Monday before recovering some ground. Tata's luxury car unit Jaguar Land Rover paused exports of its British-made cars to the US after President Donald Trump's 25% tariff came into effect. Industry data shows the US is the second biggest importer of British-made cars after the European Union, with nearly a 20% share. The US was one of JLR's only growth markets last year, and it makes up more than a quarter of its global sales of Range Rover Sports, Defenders and other models. JLR's sales account for 2/3 of Tata's revenue and a big part of its profit and cash flow. That's made Tata one of the biggest losers among auto stocks since the tariffs were announced. Its slide has been more than double the roughly 10% drop in the broader auto index. Monday's slide has dragged the stock's overall fall to 22% since Trump announced import duties in late March.
That's all from us on the Nightly Business Report for today. We will see you again tomorrow with the latest updates in the business globe. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.